Hi, everyone. Thanks so much for joining us. Lovely to have you here. If you're a return listener, so glad to have you back. If you're a first timer, welcome. Please continue to join us. I am so glad to have our guest here today. I'm glad to have all of our guests. This particular guest, I think, is going to help us demystify some of what we absolutely need to know as practice owners or people who are working in mental health practice about finance, about profit margins. How do we figure all of that out? We know in behavioral health, margins can be skinny. So we're going to try to have some conversation about how we can maximize that and just some things for you to be aware of. So let me tell you about our lovely guest today. We have with us Carla Titus. So let me tell you about Wealth and Worth Within. So WWW offers fractional CFO services for established businesses that have been running for 2 to 3 years with a team of 10 to 20 and are normally at 7 figures. We work with business owners who are too busy running their company but still need to feel in control of their numbers and utilize data to make better decisions. Wealth and Worth Within's mission is to empower business owners to achieve financial clarity and peace of mind so that they can get back to what they enjoy. Again, folks, this is about getting back to what you enjoy, letting somebody else who knows this stuff, knows finance, knows how to look at your margins, knows how to look at your balance sheets, and all of the things that we need to know as practice owners and business owners. We need somebody to help us do that if we are not somebody who has a lot of financial literacy, which I think Carla is most of us. So, folks, even if you're not in the 10 to 20 employees and 7 figures, I think there's still a lot that Carla can help us understand today. So welcome, Carla Titus. Thank you so much for being here with us today.
Yeah, thanks for having me. I'm excited for this conversation. I know that a lot of practice owners haven't gotten the support that they probably needed as they grow their business from, just them by themselves to having a team to opening many locations or wherever they're at in their journey. And they really are craving clarity on their finances and they're not getting it from their current support team, which is totally okay because sometimes we just outgrow the support we have and we need to bring in experts to help us diagnose and help us, create a new path, a treatment plan for your practice on how we're going to get better.
Oh, Carla, you are speaking our language. Thank you. You totally get it. This is not your first rodeo. So can you speak to what you do for practices and practice owners? Because this is something that is a part of what WWW does. So tell us a little bit about that, please.
Yeah, so we start always looking at the financial health of your business as part of our diagnostic of what's happening in the practice. What have you done before? What is working well? What's not working? Identify some of the gaps and opportunities where we can come in and help provide some advisory services and give you some recommendations for you to consider as an owner. We also take into account a lot, the practice culture, the people, what would work well in a practice because one answer doesn't fit every single practice out there. And we need to really custom tailor the approach to what will resonate with the team, with the company, with what they've built. So we're very, intentional about the type of advice we give to clients once we learn more about their business first. So it always starts there. And it's always from a foundation of good financial data. We can't build on a shaky foundation. We say we have to make sure that it's solid and that it's accurate so your books are caught up and your financial information is, up to date so that we can then better make decisions going forward. And then the other piece of our process is really this forecast, this forward looking. So now we get proactive about your practice, not just reacting to everything that's happening, but really putting a plan in place and in motion to say, how many sessions do you need? What do caseloads look like? Is everyone full? Do you have too many part-timers? What are we trying to build with intentionality and with a plan that's clear that says, you need to hire 2 more, and here's how we're going to afford to do that, and the cash flow is healthy enough to sustain it. Here's how we're going to compensate our people, because at times I find owners just started hiring people. They didn't think about the compensation plan, right? And it happens, and it's okay. So we go back and put a strategy to that, put some structure to it. And then we roll some of those changes out, get folks excited and grandfather some people in that don't want to change. And then we create a new path forward that's intentional, that's for growth, that's going to produce the results financially that the owner wants to see.
Hmm. Wonderful. Folks, I can't tell you how invaluable that kind of process has been in our practice. And we're a larger practice, but we've been doing this for a while. Having somebody to do forecasting, to your point, forecasting helps us make future decisions. Kind of like, I want to know if it's going to rain today or if it's going to snow. We live in Chicago. It could do one thing in 1 minute. And, even though it's here in July, it's July in Chicago, you never know what's coming next. So listening to the forecast helps me make decisions about what to wear, where to go, when to go, how to go, right? So it's the same kind of thing in our business. And to your point, I think a lot of business owners do that reactive kind of approach. They're looking in the rear view as opposed to looking in front of them. So forecasting is imperative. What does the process of forecasting look like?
Yeah, great question. Because a lot of people tell us they don't believe in forecasting. And I'm like, okay, so you drive your car without a dashboard, is what you're telling me, and you're okay with it. And you're just
Okay.
winging your way through it. And it's like, no, no, no. We want to know how much gas we have left, right? We want to know what speed we're going at. And if we can increase the speed safely, if we need to decrease the speed, if we need to watch out for detours, like it's no different. Forecasting is a process by which one, you're applying strategic financial parameters to what you're doing when it comes to forecasting. You're not just throwing numbers out there. You're just throwing numbers that make sense. You're making some educated guesses on what you think might happen in your practice. And guess what? You have history. You know what you've been able to accomplish in your practice. Now we're going to look at possibilities on how much better that can be. And so, in looking at possibilities, we're asking questions like, could we grow by 20%? Okay, what does that look like? We put a number together and then we say, okay, let's break it down. How many clinicians? How many locations? How many session counts? What is your average reimbursement rate need to be in order for that math to make sense? And this is where forecast falls short, because a lot of people are going to their accountant or whoever to say, hey, put a forecast together, but they're not talking to them. They're just saying, just put some numbers out there. We'll see if we achieve them. That's not the process. The process needs to be you put some numbers on the board and then you break down the actions on how you will achieve those numbers. That is a strategic plan. That is when your likelihood of success increases from probably not likely to 90+% likely, because now you have a plan. And if you follow the plan, because you still got to do the work, by the way, the forecast doesn't just magically happen. You put in
Mhm.
the work and execute on that plan, all of a sudden your likelihood of achieving that goal became way higher. And that probably growth wise wasn't even on your radar, but now we've actually made it reality by giving you the step by step game plan for you to follow.
Exactly. Carla, that's it. A step-by-step game plan. And I like the analogy, the metaphor, the image of a dashboard, right? I would like to know how much gas I have, what my speed is. Is my car overheating? Because it's 90 something degrees here in Chicago today, right? All of that feels really, really important. So what you're talking about is how to be strategic. And folks, strategy in business is important. It's imperative. So hiring based on the numbers, developing compensation based on the numbers. And again, in behavioral health and mental health, our margins tend to be very skinny. We've gone from being a single person, me, practice to now having 82 clinicians in 7 locations. And that wasn't by just guessing, right? I needed people who knew financial forecasting, who knew how to help me figure that out. Or I would be sitting with, unfortunately, I've spoken with a fair number of practice owners who overspent. And so now they're not sure what to do to recoup. They're not paying themselves. They can't pay their rent. It's just a grind without them being able to realize some of that profit, which is why people go into it as well. They want to work a few less hours and have a bit more money. So I think by doing that, you can help them. Forecasting can help them do that. There we go.
But I would say even a good CFO comes in, even in the bad times, what you mentioned, the not being able to pay rent, not being able to pay yourself. We've been there with our clients sometimes where they come to us because they can't figure out what to do about their situation and they feel like there's no way out. So what we do is we walk through them through a plan on like, okay, how do we shift spending? How do we ask for payment terms? Like we work the plan through like what is cash flow need to be to just cover the next payroll 2 weeks out. And we literally are in a day-to-day checking to see, did this happen? Did they make that change? Did they cut this expense? Did they make it through the next 2 weeks? And we give them the plan for them to work on, because we know we can add expense right now to the business, get them out of that paycheck to paycheck cycle where they feel like they're broke and they can't even make it to the next payroll. And that's also when a CFO is needed, because they feel like they have no way out and there's no plan. They're about to shut down. So that's where desperate times come, desperate measures, and they reach out for help because they're not sure what else to do.
Oh, that's great. So that's something, folks, if you are struggling financially, even if you're not, I think a fractional CFO can help you prosper and prosper further than we might be able to on our own, unless we're, super educated business people, which many of us are not. But that's something you can help folks do, is get out of those financial binds and also help people forecast. I can imagine somebody saying, well, if I'm in a financial bind, how do I pay a fractional CFO? So what would you say to
Great
that person?
question. Yeah, so we do offer like one-time project-based work for those that just need a little bit of help. They need some guidance. They know they can't afford anything ongoing. And we wouldn't offer that to them, by the way, because we are very mindful of budget, of course, as a good CFO. And we would just engage with them as a one time, where we give them all the guidance, all the information for them to go execute on their own. And then once they're better off or out of that situation, then they can come back and we can re-engage in other ways that are more recurring, ongoing basis. So we have ways that we can work with clients that are also smaller, that maybe can't afford a monthly retainer CFO, but need some support and they need that financial plan outlined. We have that type of project-based service as well, with just a one-time fee to make sure they know, okay, I'm only spending this, I'm making that investment, and then I'm going to go work the plan on my own. And that's always an option.
That's great. Yeah, I have a business client who through their bank, got a line of credit because they were struggling. I think that was like 10% was the annual percentage. I mean, it's not inexpensive, but they took it out so that they could get someone who was a CFO and a consultant to be able to do that work to save their practice. So there are ways that you can take a small loan, pay it back, which might be, I would think, would be better than closing down your practice altogether. So, there are ways, I think, of going after some money that can just come through your bank, and it doesn't have to be a loan. So we're talking a bit, Carla, about profit margins. And I have my understanding of profit margins, but will you please tell us just what are we talking about when we're talking about margins?
Yeah. So I think there's two pieces to the puzzle that people get confused often. There is what does it cost me to deliver the service? What am I paying my clinicians to see a client versus what's my reimbursement rate? And the gap between that is your gross margin for every single session. Now, of course, there's many sessions, there's many clinicians. So then this is where it gets a little overwhelming or more complex, because you have different clinicians have different caseloads, different reimbursement rates by insurance. Your billing might be behind 90 days. Who knows what's going on? And then this brings that complexity on understanding, okay, well, what did I get for every session? And like, is it a good enough percentage? And we want to see that percentage because we can measure that over time. So even if reimbursement rates are going up, even if compensation costs are going up, because we know that happens, you still can measure that percentage to stay consistent over time. And we can see apples to apples on what's happening in your practice. So we use that gross margin to really ground us on, okay, what is left after we pay our team? Then comes all the other costs that, we all are aware of. Maybe it's the rent that you pay for your location. Maybe it's your owner compensation, your billing team, your intake team. We have costs for office supplies and all the marketing that goes into it. And this is what we normally call overhead expenses. And then after everyone and everything is paid, there comes profit. But we're not done yet, because after profit, you still got to pay taxes. So people forget that. They're like, oh, I made such good profit, but they're not sending quarterly estimated payments. And they're like, oh, I got this huge tax bill, but I already spent all that money I made. Oops. That's where profit and balance sheet and cash flow items get really mixed up, and why people feel like, again, they still have a profit, but they don't have any money to show for it. That's where the disconnect comes in. So Going back to gross margin, that's just the first metric to make sure that you're healthy, that you can sustain your overhead and still have space left in after paying all that to have profit. And then you still have to factor in, taxes, owner's gross, retirement, all the other things that you want to do with the money that's left from the practice.
Mm, right. Well, that's it. And so folks, many of us who are practice owners will have staff come to us and say, I'd really like a raise. I'm not sure, quite frankly, what you're doing with my X percentage or the rest of the dollar amount that I give the practice, and I don't understand, why can't I have 10% more, 20% more? What's going on? Where's the transparency? What's happening? And I'm happy to open it up and say, here are all of our expenses, folks. I think they forget. So for example, if somebody works on a percentage system, the practices, their percentage is automatically 7.5% greater because we have to pay their Social Security. So they're paying 7.5, we're paying 7.5. So if your percentage was 50, it's actually 57.5. There's a lot of things that I think go into it, and it's not quite that clear and clean, but there are a lot of things that go into it. So Carla, can you explain a bit about a P&L and a balance sheet, profit and loss and a balance sheet? Because I guarantee you, many practice owners have no idea what those things are. Neither did I until I went through a training program that taught me the business side of things. So what is a P&L and what's a balance sheet, and what do we do with them?
Yeah. So I'm sure some of you have looked at your P&L at some point, your profit and loss, where you see how much revenue comes in, because you're all looking at that, right? To make sure you're making money. And then you know what your costs are. And then you know what maybe your profit left over. If you're not currently at a loss, you should be making money from your business, because we're in business to make money, regardless of what everyone else might say. Yes, we want to take care of people. Yes, we want to have great impact in our communities and give back. We cannot do any of that if we do not have profit. Okay, so let's just be clear. We're in business to make profit, and that should be a goal so we can do all the other things we want to do. The balance sheet side, nobody ever looks at the balance sheet. And that's where we always say in accounting, the bodies get buried, because literally anything that doesn't land on your profit and loss will get thrown over to the balance sheet. And if you're not paying attention, your balance sheet could be completely misstated. Your bank balances don't match what your current bank account says. You have a problem. If you have liabilities buried in there for payroll or whatever else that your bookkeeper team put in there by mistake and you didn't look, they're sitting there waiting for you to catch them, or your accountant will at tax time, and they will not be happy because things won't balance, right? That's why it's called a balance sheet. The assets have to match the liabilities and equities, and they're the same number and they balance out. So that's why everything gets buried there, because in the sense of balancing, it has to match. It's going to find whatever numbers to make it match. And that's where mistakes happen. So what we care about in the balance sheet is bank balances, to know they're accurate and up to date. This is all the bookkeeping side, should be doing. We want to make sure that any money you owe to people, like liabilities, are recorded correctly there. If you have balances on loans, that they're actually getting paid down, and you show the payments broken down between the profit and loss and the balance sheet. Again, if this is not happening and you're seeing weird balances, you should be asking questions. And then your credit cards, and then you might have any money you put into the business. I see this often. Business owners put in a ton of their own money and it's nowhere to be found. And I said, well, didn't you put in so much money? And they're like, yeah, I did. I'm like, well, I don't see it recorded anywhere. And that's because nobody looked at the balance sheet again. Or the owner takes out a lot of money from their business and we don't see the draws coming out. Well, that's a problem, because now you have misstated financial statements that you might use for the bank, you might use to file your taxes, and everybody's all about the deductions and the things, but they don't care about bookkeeping. So this is a big disconnect I see happen, where we look at balance sheets as part of, doing bookkeeping work, and we just see all the things that are wrong. And then I'll say the one other thing I want you to watch out for, business owner, is you don't need to know anything about accounting. You just need to know if you're cash basis or accrual basis, because the way you account for your books is very different on each of those methods. And if you're not paying attention, you might be having your team mix the two and asking them to do things that are not correct. And this will, come back later to be a problem that you'll need to solve. So just a caveat there for you to watch out for.
Okay. Yeah. Will you just say a few more words about that, Carla, if you're cash or accrual, just in case folks are aware?
And this is where I definitely engage with your accountant to make sure they're aligned and your bookkeeping team is doing the accounting in the right way. But when you're cash basis, you're recording when money comes into the bank. So if you have an insurance company that has your money and hasn't paid you for 90 days, you still cannot account for that because you're cash basis. You're waiting for that money to hit the bank account. But if you're on accrual basis accounting, you can say, I have $100,000 of outstanding money owed to me, and I'm going to record it as an accounts receivable, meaning the money is coming. You can record it as revenue today because you earned it, you provide a service, but you haven't yet gotten paid. So once the cash comes in, then we'll record it on the balance sheet and offset that receivable. But until then, you can claim you've made the money. Where I see people going the wrong way on accrual accounting is they forget the expense side of it. Like you have to accrue the revenue and you have to accrue the expenses. So anything that you owe to people that you haven't paid yet because of whatever reason, you also need to accrue for that. Otherwise, you're not doing that correctly. And there's too much focus on revenue, not enough on like making sure this is done correctly.
Yep, exactly. Folks, that is a real pearl of wisdom. There's a lot of focus on revenue. And I have spoken with people where I say, so tell me about your top line, bottom line. And then I explain, well, your top line is your revenue, your bottom line is your profit, what's happening. And they're real clear about the top line and they have zero idea. And folks, this may not be you. So I'm sorry if this feels like you're not speaking to me, but this happens for folks. They're aware of the top line. They cannot quote the bottom line. And there are plenty of people who aren't really clear on either. So that, to your point, I talk a lot on this podcast about we have to run our business by the numbers. So a lot of folks that I know will enter their expense, they'll enter everything into QuickBooks. And that is their way of doing their bookkeeping. What do you think about that? Does that seem complete to you?
So that's not where the process ends. That's just the start of the process when it comes to bookkeeping. I think bookkeeping is so misunderstood, but it's such a critical role in your business. And a lot of business owners are there that we've seen doing it themselves or, having someone who's not experienced doing their books will catch up to them eventually, right? It's hard to tell them, well, don't do that ahead of time because I haven't felt the pain of going through tax season with those type of books. But what happens is maybe they categorize in the wrong place. Maybe nothing has been reconciled and they charge you double for a transaction and you didn't notice it because you didn't go through your bank statements to see, oh, I got 2 of those transactions. That's a duplicate. That's actually not real. And now you're overstating your expenses. And, if you ever get audited, that's going to be found. Whether you did it on purpose or not doesn't matter. You're responsible for your book's quality and integrity of data. So reconciling against your bank statements is a critical step in bookkeeping that, again, feels like an overkill at times because owners are like, why do I need to reconcile? Because that's where we find all the mistakes. That's why we reconcile. And your balance should match. And if it doesn't match, then we have questions we need to ask and things we need to fix. And maybe the balances in your bank account were off when we started. Like we need to fix that and, make adjusting entries. And there's just so much more to the process than just putting things in whatever buckets, that you think are correct. And also producing the financial statements. Like we as CFOs rely heavily on bookkeeping work on the sense that if we have accurate financials, now we can forecast better outcomes for the business because we're clear on what actually happened. We know those are the real numbers. But when your revenue is overstated by mistake, double what it should be, and you didn't notice, or when your expenses are below what it should be, because, we look at trends and we see, well, every month you spend roughly this, and then this month is half. What happened? Well, they're missing half of their transactions because one of their bank accounts didn't connect. And nobody asked any questions because the bookkeeping team or the owner didn't notice, and they're not checking those trends. And this is where a good CFO is coming in to spot, wait a second, I see your payroll normally is this much. This month it show how it's half. What happened? Like, do we need to fix a mistake? Do we need to go back to the reports and make sure things are recorded correctly? We're not just going to say, oh, we have so much profit. Yay, celebrate, move on. We're going to ask a lot of questions to get this fixed to make sure data integrity and accuracy is accounted for there.
Mm-hmm. Absolutely. Yeah, I'm glad that you brought that up because a lot of folks, everybody's busy, right? And many practice
Absolutely.
owners are still very much in the day-to-day weeds of needing to see clients. They might have a full client load. They're supervising their staff. They're doing the administrative pieces. They might also be doing the billing themselves because they're pushing the buttons and, the money, they send the claims, the money comes in. But that reconciliation piece is very mission critical. So if somebody can't afford a regular engagement with a CFO, a fractional CFO, what would you suggest? To your point, you can do project-based work. So should somebody make sure they do that quarterly,
Yeah.
semi-annually, annually? I mean, just at a minimum, what is best practice?
Yeah,
At a
I
minimum.
think every business can benefit from strategic financial planning. Let's start with that. No matter the
Right.
size, we've worked with pre-revenue companies that literally had an idea and we created a whole business plan with financials around it to really clarify their path forward. So this is not something that only established businesses can do. Even if you're a solopreneur and you need to know what you're trying to achieve next year, you should have a financial plan that tells you by month, by caseload, how many sessions, how many clients do you need, what reimbursement rate should you expect? And getting that clarity will allow you to focus on executing, because now you're not doing the guesswork as you go through every month. You're like, well, what it should be? I don't know. Like, let's think about it. And then I don't have time. I'm busy. I'm seeing clients. Forget it. And then, it just ends up being whatever it is. And you're disappointed with the results and you wonder why. Versus if you had a
Right.
clear goal and you say, oh, I'm on track for that goal. Or like, oh, I'm short. I'm going to go see more clients and make sure that I fill up my caseload this month to hit the goals that I had outlined. That's a very different conversation, because now you're in control of what you want the outcome to be. Not to say you won't change your mind and maybe not work as hard in the summer, that's okay. And it happens, right? But you have an action plan for driving to the goal and the clarity to be able to take those actions to get to it. I find that businesses who take the time to plan strategically are more likely to succeed and achieve their goals than businesses that don't spend that time working on the business, not in the business, people, because we spend too much time in the business and not enough time looking high level, CEO, visionary, and then bringing it back to like the integrator role for those of you, familiar with EOS, to execute on that plan. But you got to have the vision and you got to be able to communicate that to your team or do it yourself. And that's where strategic planning really meets execution to make it, come to life and be achievable.
Absolutely. I love that, folks. If you are not familiar with that, and I know we've talked about it, but if you haven't heard episodes where we've talked about work on the business, not just in the business, it is an incredibly important business tenet. So I'm glad you brought that up. That means we're not just doing the grind every day without the time and energy to be thinking about the business. And I have heard many people say, I don't have time to hire other people. I need the money. So I have to keep working. I'll tell you the way I did it. I worked and I was the biggest earner in our practice for a long time. Then I started to replace myself. And it took two people to replace me, because that's just the difference between somebody who's an owner and somebody who isn't. I think that was it. So I replaced myself so that I could back up more. And I still do clinical work because it's why I became a psychologist. But again, I love the business pieces, but I now think like a CEO. I don't just think like a therapist. And a CEO has responsibility to make sure that we're steering that ship, to your point, right? So I want to be in the front seat, in the driver's seat, not in an Uber in the back, hoping I gave the driver the right location, right? I want to be the one. That's it. So I'm very glad you brought that up. So what would you say are some of the top three things that practice owners really ought to start thinking about today? They should be thinking about it this way if they already are paying attention to their numbers, and maybe they should be thinking about it this way if they're not.
Well, I'll just say one more thing on the CEO hat piece. I find that when practice owners do replace themselves, they choose how and when they engage into the practice in the roles that they enjoy the most. So they're the happier people I know because they've outsourced all the things they didn't like to do, but now they know they can go to their experts for the data support guidance they need without having to do all the work themselves. That was like gut wrenching that they just left for the end because they didn't want to do it, right? So in any case, that is the function of the CEO getting to the point where you just delegate everything that you don't like to do, and then you engage in the things that bring you joy. And that's where we want to get to. On the 3 things practice owners should know, they should know their numbers. I know this is a common one where mental health practitioners are like, well, I'm not good with, money, or I'm not good with numbers, and nobody ever taught me. And I'm like, I get it. You did not grow up around money, talking about money, managing money, doing the business thing. Absolutely agree that this is not a skill set everybody should have. But you chose to be a business owner now. So now you get to learn it. And whether you love numbers or hate numbers does not matter. You just need to know enough to be able to make good decisions. So knowing your numbers is number one. And if you don't know them, that's okay. You got to go get some help. You got to go get educated, just like you go your degree for mental health, to be a therapist, a psychologist is no different. You just got to get the basic 101 on finance so that you just know enough to be able to ask the right questions. Okay. Because even when you have an outsourced CFO, we are still answering questions for clients. We don't expect them to be completely like hands off and just delegate and forget. No, not at all. We're just now doing the work to give them the data to make better decisions. That's the difference. They're still asking the questions. Yeah. And they're still asking the questions. And we're still doing the analysis and bringing them information to help them, answer some of those questions. Right. So it's just a little different role, but it's still, you got to know your numbers. Like we're looking at numbers with them. In case you're wondering what the meetings look like, there is a financial review meeting. There is a strategy meeting. There's consistency on that and accountability, because our owners appreciate having that, because they're all too busy too. Think about it. They're running big practices. So it happens. They don't have time, but they will make time for their finances. So knowing your numbers. 2 is like having a solid support team. I feel like if you're not in a position to outsource everything yet, it should be in your plans to get to the point where you can outsource. And it could start with your biller, right? Like so many clients spend so much time doing the billing work. Like go hire someone hourly that can do that for you. Get that off your plate so they can go chase down. Like that is their day job, is to go chase down invoices, call the insurance, follow up. Like you don't need to be the one spending time doing that. That is something that is critical to cash flow, by the way, in the practice, and should be a priority in your practice if you're insurance based. If you're private pay, maybe you can get away with a little less because, they pay you upfront in full at times, so you don't have to chase anyone. But, afford a biller, an intake team, those are the things that are going to keep your front end of the practice running, bringing in leads, converting on the intake, and then on the back end billing to get the money back in your practice. And then third, I would say owners just need to be asking questions. Like if things are not working right, is there something that's wrong that we could fix? Do we have enough clients? Like any questions about their business that they don't have answers to, they need to go get answers for. So it starts by asking the question. And then if you don't have staff, you're going to go find the answer yourself. If you have staff, you're going to delegate it to them to get the answer for you, which is the magic part, is delegation, by the way. If you haven't experienced delegation yet, I highly recommend that. Even if it's 5 hours of someone's time that you get, you will be hooked and you will never go back.
That's right. That is so
Affordable
right.
and super powered to have another person help you do all the things that we have to do as CEOs. We can't do it alone. It's a lot. Delegation is key. But asking those questions is going to be key in how you grow the business, where you find the gaps, and where you start to address some of the issues that maybe you're not even aware that is happening.
Absolutely. Yeah, boy, having that time to be thoughtful as a practice owner, it's a luxury, but it's one that I think we have to carve out time to bring to fruition. It just has to happen. Easier said than done, but I've done it.
Let's start by
folks, now.
blocking 1 hour a month. A month.
That's it.
Like it doesn't have to be big. And people always are like, well, I have to look at my numbers like a whole day thing. I'm like, what if you just did 15 minutes a week? Like seriously, it could be like the first thing you do, like eat the frog in the morning, right? Like if that's your style, or maybe do it at the end of the day if you're a night person like me, whatever. Just carve out the 15 minutes. I know it's scary. I know it's daunting if you've never done it before. And I'm surprised. Sometimes we look at numbers with clients that are new clients to us, and they're like, oh, it wasn't as bad as I thought. We just make it scarier than it needs to be. We make it worse than it needs to be. And then when we look at it, they're like, oh, we can work with that. Fantastic. This is our starting point. What are we going to do to change it going forward?
Exactly. That's it. And folks, believe me, I get it. This is a hard transition to make. I remember the fear that went into it, the nights where I didn't sleep as well. And I'm so glad I did it. I don't remember the name of the woman who is the creator of the Spanx brand of undergarments, but I
Oh,
remember
Sarah
listening.
likely.
Yes, Sarah Blakely. Thank you. I remember listening to a podcast of hers when it was still just me, or a recording of her. I don't know if there were podcasts back then, but she was talking about how in the beginning she had to do everything. And then as soon as she had any money, the very first thing she did was hire somebody part-time to do the things she just wasn't as good at. She didn't like, she didn't want to pay attention to. And as soon as she could, then she hired the next person. And I really followed that. And folks, I will tell you, it is the march toward success. And it's success of your business, the personal sense of satisfaction, and from a financial perspective. So the question I'm going to ask you today, and I would love to have you back because there's a lot more I think we could talk
Yes, we
about.
can cover.
I know we feel like we're just kind of skimming the surface here, but when we're talking about in behavioral health, I've said a few times, profit margins are skinny. What is a typical profit margin that you're noticing for, let's say, an insurance-based business? And what should it be?
Yeah, I mean, lately it's been a struggle, right? We all know the industry is shrinking. There's a lot of consolidation with capital firms, venture capitalists buying up firms. So we know there's definitely money to be made because they're being bought. So that means there's money for, venture capitalists to be interested. But then there's the other side where there's practices struggling. And I think the other side, which is the more real and tangible, we're seeing margins of like 20, 30%. People are paying, commission splits that are 70+%. They're forgetting their overhead costs. They're forgetting like they're giving benefits on top of that. And, there people are saying, hey, you're still not paying me enough. We need more. Can you do 80? Can you do 90? And it's like, ooh, that practice is not going to be here for a long time because we just don't have enough to cover overhead. And it really is dependent on variables, right? If you're only telehealth practice, you have a lot more room because you don't have the rent overhead that, physical location practices have. So there's that piece of it. It depends on the size. How many clinicians do you have producing at what level of margin? And that can vary depending on which clinicians. I see often we have a lot of part-time clinicians that are, less than 12 hours a week. And we're like, is that mathing for you? Because if we go run the numbers, I'm pretty sure it might be really tight. And it's a choice. I always tell owners, you have a choice. You can choose some of that. You can mix it in with higher margin people. You can, shift the margin if you want to. But, where we feel comfortable is having margins of around 40% before we pay, the CEO admin staff, overhead staffing, and or higher where possible. And it has been a struggle because reimbursement rates are shrinking. Insurance companies are consolidating. So they're like, oh, once we consolidate under this one, we can pay you less. It's great. And they don't tell you, they just start reimbursing you at a different rate. You're like, what happened? And we ask a lot of questions. So we don't have control of like how much we charge because no matter how much we increase it by, insurance will dictate to us. Right. But we have a choice though. What I tell my owners is we can choose not to panel with that insurance. It's a choice. Might not be a smart choice if it's 80% of our revenue, but we can look at that and make an informed decision, based on like how much revenue we go through that insurance. And we can renegotiate our contracts. We can, do these things on a regular cadence to make sure we're getting things to a healthier place. While we can't control it, there's things we can choose to do. And then we can choose what compensation we give our, clinicians, whether we like it or not, whether the market commands a higher rate. That's things and variables we will take into account. But at the end of the day, the practice has to have healthy margins for us to be able to operate and be here long term. And as the margins keep shrinking from both sides, compensation goes up, reimbursement rates go down, we need to find ways to operate in a leaner way and look at overhead expenses and say, what else can go? What can we live without? And sometimes it's like, I've seen practices that don't have an intake team. They have their clinicians do intake. And it's like, well, that's one approach, right? Good or bad, it works for them, doesn't work for others. Like that can happen. So we just get creative and we start looking at all the expenses, see what can we do? And, everything is going up in price. So like, we're very aware that our budgets are getting smaller. And it's my job as the CFO to figure out what levers are we pulling. Are we adding assessments? Are we adding other type of services to help us bring the margin up over time? Are we hiring our APRNs to help us, with med management to expand services so we can get a higher average reimbursement rate tied with mental health? services. We got to get creative. We got to start exploring other ways and things that we can do. Are we adding summer camps? What are we doing to kind of help,
Mhm.
depending on the type of practice you are? But we want to keep the margins at 40% plus. And, how we do that is we first analyze where you're at, create a plan of how we get to that, and then start implementing accountability and other things that people don't love, but it's what drives the business
Mhm.
to profitability so they can be here for years to come.
Mhm. That's great. Wonderful. Well, Carla Titus, this is great information. I think these are things every practice owner needs to know, and I think every business owner needs to know. Folks, what I like about Carla is clearly, and I'll address you because you're the person I'm speaking with, Carla, is you know our industry, and not everyone does. So, folks, if you're looking for a fractional CFO, you might want to contact Carla Titus with Wealth and Worth Within. If someone wants to do that, what is the best way for them to connect with you? And folks will have it in the show notes, but what's the best way for people to connect with you?
Yeah, if they're ready to hire a fractional CFO, or they want to talk to us about what, gaps they see that we can close, then go to our website, wealthworthwithin.com. There's a let's get started button where you can schedule a compromise 20-minute call. We will go through what your needs are and how we might be able to address them. Or if we're not the right people for it, we will also tell you that we're very honest. We just want to make sure everybody has the right support. If they want to follow along, they're not ready to hire a CFO, but they want to get better at their finances, feel free to sign up for our newsletter on our website. And we just launched our very own CEO Financial Clarity Corner podcast in all platforms. Thank you. I'm really excited to share a lot of this financial knowledge that a lot of business owners need and are craving, but they're not really getting it from their current support team. So go check out our podcast, subscribe, listen. It's all free, just like our newsletter, because we want to just get people educated on how to be better with money so you can be here for long term and eventually hire us, if you need a CFO.
Hey, I love that, right? That is just the honest truth. And you can really be helpful for folks. So, folks, if you can, hop over, look at Wealth and Worth Within, look at their website, look up what Carla's been talking about, listen to their podcast, and please come back and listen to this one again as well. So, Carla Titus, thank you so much for joining me today. I really appreciate your wisdom. Folks, again, I hope you'll come back again next time. If this is your first time, if you've been back before, come back again. Thanks, everyone. Be well.